Hello, good afternoon, everyone. Thanks for joining us on the third day of IOC Argus Online Energy Forum. Yesterday and day before yesterday, we touched base on crude and refined products market. We had Francis Osborne from our consulting team and Alejandro discussing about the crude markets, and we have uploaded the presentations on IOC service portal. So if any one of you doesn't have the access, please do let me know. We can always send you the slides directly. So today we are going to touch on the LPG market. We have David Appleton, who will be discussing on the LPG global and regional supply demand, impact of COVID-19. Where LPG has been considered as a very resilient commodity in the fuel space. We'll be also looking at global trade flows and the forecast of the market. Please do keep your mic and camera off during the presentation. We'll be recording the presentation and uploading it on IOC Argus portal. Without any further ado, I would like to invite David to start the presentation. David, over to you.
Thank you, Parimal. Can you just confirm you can hear me okay?
Yes.
Thank you. And welcome everybody today. And before I get started, I just want to offer my full sympathies for the entire IOC team and all of your families. We obviously know it's a very difficult situation right now in India, but I hope sooner rather than later it gets much better going forward. So many thoughts from myself and the rest of the Argus team. However, we are going to today go through the LPG business, hopefully in some detail. I'm going to share my screen shortly. As Parimal said, if it would be possible to keep muted and cameras off, that would probably be helpful with such a large group today. I'm going to go through a number of different topics around market trends that we've seen in LPG over the past year or so, some of the key elements related to trade flows and the impact on pricing. And then we'll move into the outlook going into 2022 as well. If anybody has any questions, I think, again, with this number of people, it would be better if they are left to the end. But once I've finished up the slides, please do not hesitate to put your hand up and we can have a discussion about any of the points I've raised or anything else to do with the LPG markets. So I'm going to start now by sharing my screen. Parimal, could you once again just confirm that that is fully visible?
Is visible.
Great. Okay, thank you. So I'm going to get straight into here, and just to note that everything you see today, or almost everything, is drawn from one or more of our publications, reports, and the pricing and fundamentals data that we have. These are the reports. I believe that you have access to some of them, perhaps not all of them, but if there's anything of interest, please do get in touch with Parimal and the sales team about what you would be interested in understanding. I should note, really the key publication is Argus International LPG. This is our daily price report, which includes our benchmarks such as the Argus Far East Index and various other prices and swaps prices and so forth. And then as we go across this screen here, we move from our business intelligence report, which offers insights on the market, LPG world, and then these three last publications here are more focused on the forward-looking view. We have the LPG analytics service, which goes really into detail on supply and demand and prices going out a number of years. Our monthly LPG outlook, which is primarily a price forecast, and most recently launched is our international LPG forward curve. So this is a publication which gives a very comprehensive view on the paper markets, which are often a very good guide as to where the physical prices are going to be going forward, and has other applications. So that's all in terms of where we're getting the data from, and I'll move into the presentation now. And as Parimal mentioned, LPG has performed quite differently to other oil products and most other energy sources across the pandemic. And the reason for this and to understand this, you can really look at the macro picture. And here we have global LPG demand sector for 2019. And what you can see is that roughly 40% is residential. And of course, that is what makes up most of the Indian demand for LPG, which is cooking fuel. It's also heating fuel in many northern countries where it gets cold in the winter. And then the other key source of demand is petrochemicals, in particular in steam cracking and propane dehydrogenation. And then we have a smattering of other demand sectors, the industrial sector, transport. LPG is used as a transport fuel in a number of countries, but largely speaking, those are the two which really drive the market. And if we compare that to, for example, gasoline or diesel, you can see that it's a completely different picture. Here we have road transport for gasoline making up 95% of the demand pie. For diesel, it's about 70%. And if you think about the relationship between crude oil markets and the products and the pandemic, it is clear that if you have a fuel which is based largely on something like cooking and petrochemicals, it will behave quite differently when we have a series of lockdowns around the world over a period of 15 months now, which have limited the mobility which drives the demand for these products. So that's the first key point, and we can really see that reflected in the pricing trend over the past year or so. What we have here is our two key benchmarks for propane and butane. That's the Argus Far East Index, which is a delivered Japan price, compared with the naphtha Japan in red. And I put in naphtha because it is a competing feedstock, but also it is very closely related to the gasoline crack as well. And what you can see is that if we go pre-pandemic and back to 2019, you have a healthy discount for LPG across that year, almost for the entire year, except a small peak in 2019. When we move into 2021, we have a crash in prices that was originally due to supply side dynamics with the OPEC Plus agreement falling apart in March of that year. That seems like such a very long time ago now. And then this is where we see the pandemic come into play and the specifics around LPG. And you can see how in particular in the first phase of the pandemic and the first phase of lockdowns, we saw LPG trade at around 200% of naphtha and was a premium for pretty much the whole quarter. Then there was something of a return to normality going to the third quarter. And then again, when the pandemic hits, in the second phase of the Northern Hemisphere winter, we saw a similar situation. You will, however, notice that prices on the whole are going up across this time, and that of course is connected to the crude oil markets and the supply constrictions, which I'm sure Francis and others have been talking about yesterday, which was OPEC Plus effectively propping up the market. So while the context of the markets is different, the relative dynamics here are much the same, with LPG being resilient during peak pandemic, while other fuels are less so. And now you can see we've moved into this next period, and we are now into 2021, and we are again seeing a return to normality of that relationship as it stands. And this is indeed partly due to the fact that we see in particular in Western countries an easing of those restrictions, and also of course in China, which is also not under lockdown at this point. But also we should remember that LPG has its own reverse seasonality to the core oil products, whereby the Q1 and Q4 of peak heating season tend to see higher prices, and Q2 and Q3 tend to see lower prices and a lull, which we will look at in a bit more detail later in this presentation. So that's been the story of LPG, and I should stress here, I'm showing the Argus Far East Index, and of course India is a market which is more based on the Saudi Aramco contract price, but in fact I could have put more or less any price set or any price comparison on this chart, and you would have seen a similar trend here. It's something that has borne through all regions and various prices around the world. I'm going to move now to trade flows, and the trade flows in LPG have changed quite drastically over the past few years, and that is also having a very big impact on pricing, and in fact even on pricing in regions such as South Asia. And I'm going to start in Northeast Asia here. We have Japan and Korea imports by origin, and you'll notice that we have these red bars which are dominating these two charts, and in fact are getting bigger and bigger. And throughout this series of trade flow charts. The red is the United States. And what you'll notice is that across this 5 or so year period, the US is now absolutely dominant in terms of supply into Northeast Asia. And if we'd gone back, say, 10 years, it would have been a very, very different picture that we would have seen with this, with the Middle East products, which now India is importing, really going into that region. But these markets are more or less completely dominated by the US, and this has quite a big impact on the pricing, which we'll see in a second. In contrast, you can see that India remains very heavily reliant on Middle East products. And there is a logic to this, which is simple logistics. It's a 5-day voyage from most Middle East export locations to the west coast of India. It means that it is both quick and relatively straightforward for Middle East producers to send products to India as opposed to further away. And of course, it is cheaper as well. We do see some other product coming into India, and you'll notice there is the occasional US cargo, but for the most part, it has not been economic for US LPG to go into South Asia as it stands. And so the key point here is that while Japan and Korea have moved to US products, Indian import demand has gone up quite significantly over this period. So when that market share that the Middle East have lost is now going into India as the country has ramped up its subsidy program and increased the availability of LPG as a cooking fuel to more and more people. And then to look at China, which is of course the biggest importer of LPG, not just in Asia, but in the world. Obviously the thing that stands out here is that we do have quite a mix of import origin, and then suddenly the red completely disappears, and then suddenly it comes back again. And I'm sure a lot of you who are reading the Argus reports will be aware that that is due to the trade war or the retaliatory tariffs that the Chinese government put on US origin products, which began around the middle of 2018. This made US LPG completely uneconomic into China because it had this 25% premium. And what that meant was that they relied far more heavily on products of other origin. Now, the trade war has not ended, but it has in principle for LPG for the time being, because the phase 1 agreement led to China allowing US LPG back into the market from about a year ago, a little bit more than a year ago. And those tariff waivers have been extended until September. So this has meant that we have a normalization of the market in terms of the ability of the US product to go into all of Asia and not being effectively embargoed from the biggest importer in the world. And the Chinese need that product, and the reason they need that product is because we've seen enormous developments in the Chinese petrochemical business. Here we have the 2020 projects, which are of relevance to LPG as a feedstock. And really all we need to look at here today is the fact that if we annualize that LPG demand, it comes at something like, at full capacity, 7 million tons of LPG. So that's really a significant amount of LPG, mainly but not exclusively propane, that the Chinese have needed in addition to the situation from, say, 2018 or 2019. So it's the Chinese demand for LPG simply continues to grow, and that is mainly based on imports as well. And then just for completeness, I'm going to show the Indonesian imports as the 5th biggest importer in Asia, and one that's often overlooked on the market. And it's interesting that if we do calculations to the value of LPG in various locations with the freight considerations and so forth, it has been the case, and it was particularly during that trade war period, that this was really a battleground for supply into the region, because of course with US LPG somewhat distressed, it had to go further into Asia, and we saw that Indonesia was a key destination, and that has remained the case, in fact, going past the trade war time and over the past few months as well, which has been a very interesting development. So just to sum all of this up before we move into the pricing, you can see that effectively we have got 2 different regions which have a large amount of availability, namely the US and the Middle East. and they effectively fight over one region, which is Asia Pacific, and that's Asia Pacific both for petrochemicals and for cooking markets. And what you can see here is if we look at the situation for 2020 as a whole, we see the further we go away from Northeast Asia, the more Middle East product is used and vice versa. And we see increasingly also other origin LPG also come into play in certain markets, particularly China. I note here that we have Australian LPG, which is widely available and is going very much into North Asia as well. And then we have a smattering of other suppliers who also come into the region. And the reason this is important is because of how it has been impacting pricing in particular. And what we've seen is that with this supply from various locations, the price is effectively set in East Asia. And for the most part, we are seeing prices adjusting from that delivered location and netted back to various places in the world. If we look at, and I've mentioned that we see all these different trade flows and locations, but in the case of LPG, everything does effectively link, despite all this movement of products, to four prices. We have the Argus Far East Index, we have the Saudi CP, in Europe the CIF Hour Large Cargo Price, and then in the US in Mont Belvieu. So generally speaking, despite the fact that we have such a varied market, and in particular all this products coming into Asia, most prices around the world are linking one way or another to these, and generally speaking, we see that East Asia leads the pricing trend. So we'll focus mainly today on the interplay between the Far East Index and the CP. And what we've seen really as a trend, especially during the pandemic, is that there is generally value in the Far East Index, and that is really a reflection of the fact that we do have those competing sources, particularly from the US, pushing the prices down relative to other parts of the world. What I've got here is a chart of a simple propane comparison between the Far East Index and the Aramco CP. And what you can see is that, in particular, this period, which I think is the most interesting, is where we have a relatively flat period of pricing in the third quarter of last year. We see that the CP is actually trading or is being posted above on an FOB basis where the Far East Index is on a CFR basis. And so that really is an indication that the pricing situation for Middle East LPG is much more reflecting further into Asia rather than into the delivered market. And if I go to put a like-for-like comparison here, so you can see in this case we have the same two prices, but I've taken the net back to the Middle East, so that's the delivered Japan price with the freight removed. You can see how this has become a really consistent trend between the two. And if we were to go back a number of years, there would be a much closer correlation. And the reason for that is because at that time, we didn't really see so much competition on the Asian market, in particular that East Asian market, where we're seeing those trade flows become more diverse and more incursion of US products. And that trend is really reflected in the annualized data. So if we take both propane and butane and look at that premium, you can see how it's grown over time. In particular, we saw in 2018-19, it began to become much wider. And the reason for that was much clearer at that time, which was due to the trade war, because Middle East LPG, or more accurately, non-US LPG, had a premium on the international market. But what was interesting has been that that trend has continued since then. Part of that is due to a falling price trend, which was the characterization of the second quarter of 2020 in particular, but that premium is very, very much still evident in the market. And I think it's not that surprising. We see this movement of LPG from the Middle East into Southeast Asia. So that means that the values and the correlations are going to change as a result. And what it certainly does mean is that it also impacts the spot prices as well, because what we've seen here, if I take the butane CP discount or premium over the past 2 years, what you can see is that particularly post-pandemic, we've seen that where the CP has been set, which is 0, when there has been spot availability, it is basically pricing at a discount to the CP to go into delivered markets in Asia. So that's certainly an indication that when Middle East LPG needs to find a home, it needs to price below where the monthly market is. And the other major development that we've seen because of this misalignment of pricing is that there has been a movement of Far East Index among importers around Asia. There's a number of examples here which you can look at after the presentation. As Paramount said, everything will be available, but I would point out in particular that we've seen a lot of the newer producers pricing on an FEI basis. Here we have the new LNG projects in Australia are selling on FOB FEI netback basis, and then also we've seen in China a lot of those petrochemical companies move in that direction as well. So it's become a really key trend in the market as Asian importers look to get the appropriate value for the product that they are importing. The other important pricing hub which we need to discuss at this point is, of course, US prices. Now, US prices are much more correlated with East Asian prices, and you can see how when we do price comparisons between Mont Belvieu and the FEI, it's a much closer correlation. On the left here, we have the daily a daily arbitrage calculation between the US and Asia. In this case, I've taken the FEI month T swap against the US Gulf Coast price. And what you can see is that this line is going above and below 0 very, very frequently. It does not stay on 0 because, of course, the market is always moving, cargoes are moving, and there is more demand on the Asian side of the Pacific or more supply availability and so forth. But the fact that it goes up and down so regularly shows that how absent a structural bottleneck, there is a clear correlation and clear connection between those prices. On the right here, and more simply, what you can see is how those prices run together. This is a very simple calculation, taking the physical FEI and netting it back on a given month to the US Gulf Coast export price. And you can see they largely, with a couple of exceptions, run very, very closely together. And the reason this is important is because when we talk about availability of LPG and, for example, India potentially importing US LPG, these two charts demonstrate how difficult this is, because ultimately they are a demonstration that the pricing of US LPG is linked to East Asia. And of course, when we have the Panama Canal in play, this means that the additional distance to India generally makes US prices plus freight difficult to not very easy to work in terms of the delivered price into South Asia. So it's something that a trend that I think is worth watching if you are understanding the interplay between prices around the world. The other element of US prices, and in fact US products, that I would point out here, which I think is very important, is that it comes with additional risk. On the left here, this is actually a period where there was significant price risk, where the arbitrage was actually often below 0 due to significant oversupply on the market and various other factors around the term contracts that were signed at that time. But alongside that, you have physical risk at the US as well. And I should be clear, US LPG is extremely important to the global market, and there would be no proper functioning in Asia of petrochemical facilities or of the expansive additions of LPG as a cooking fuel, which has benefited so many people. But from time to time, US LPG does get stuck, and there are a number of reasons, often related to weather. We have hurricanes there, which we have to watch out for in July, August, September. We often have fog in the first or second quarter. And also, of course, unusually this year, we actually had frozen weather situation out of Texas in February, which ground everything to a halt as well. So while I think it's always useful and worthwhile to understand US pricing and US availability, it does come with, I think, some additional risks that don't really apply to the Middle East, which is it's much easier to lift products and they don't have the same logistical constraints. So that's more or less all on the trend side. We're going to move to the outlook now, and I would headline that the situation now is kind of a period of calm in the LPG markets, and that's largely, I guess, due to some normality returning here. I've put a couple of stories from Argus Direct, our data and prices portal here. We've seen things going on which you would expect would raise prices and cause problems. As I mentioned, this issue with the big freeze, and then also with the Panama Canal and so forth, you would expect them to cause significant problems. But when I look at the pricing chart over the past 3 months, this is zeroing in on the chart I showed earlier, you can see how the blue and black are kind of just slowly going down, no stress on the market. And that's an indication that we are relatively well supplied at this point. There are a couple of other issues, dynamics here. In particular, there's been quite a lot of maintenance of petrochemical facilities out of China, meaning that they are not in a real hurry to get hold of products. And of course, we do have this ever-present seasonality, which often comes into play around April, May, and June, where it's really a more restocking period, particularly in the Northern Hemisphere. And then if I take some data from the Argus International LPG Forwards Curves product, this shows the same product, so the same situation here. What we have on this chart is the CP time spread swaps for the physical to month one. So that's the difference between the CP on a given month and next month's swap. And then going forward again, 2 versus 1, 3 versus 2, out to month 4. And really all that matters here is that we've been in a period of backwardations pretty much since January. And that is basically normal. You would expect that as you come out of the Northern Hemisphere winter. But it is notable that the averages have been really quite significant. So these are quite significant discounts that we've seen across this period. But where we are now, we've reached a period where in May going forward, we are seeing that the market is very, very flat in terms of the view from our forward curves team. And actually, what's interesting to look at here is the chart on the left shows you the month one difference to CP on an average basis versus where the actual CP ended. So generally speaking, this is a pretty good guide as to the direction of the CP. And as I mentioned, if I pull in the data down here at the bottom, you'll the June, July, August, September values over the past few days have been particularly flat. So to me, that really is an indication that as we go into the third quarter, we're looking at a market which is really in lull. There's not too much going on to make anyone feel that there's going to be too much product on the market, and vice versa. We're not going to see any significant structural demand that means everything has to move over to Asia and prices will go up. Now, of course, this always comes with the caveat that things can happen in the future that we cannot foresee. There are always incidents, be it weather or something else, or logistical problems that could arise. But largely speaking, we see a flat market on the swaps, and also in our LPG outlook forecast, it is relatively flat going forward, and will largely be determined by the direction of crude. One key theme that the market is certainly concerned about, while I mention that though, is the situation with US stocks. And the US EIA publishes data every week on propane inventory and propane exports and demand and so forth. And we are in a situation where the 2021 picture as we go into May is below average. And what this tends to do is create some concern particularly in East Asia, about what will happen when we get to this period, August, September. And so this is a data point that we watch very, very closely on a weekly basis, and is covered in International LPG and also on a monthly basis in the LPG Outlook. And the reason we look at that is firstly because it is such an important fundamental, but also because the market will often interpret this very, very clearly in the direction of prices. Now, the actual fundamental situation can be different to what we see here. One of the shortcomings of the EIA data is that while it is weekly, it is only on primary stocks. And what I mean by that is there is no data on what is with the consumers. There's no data on what's in cylinder depots or smaller storage, only in primary stocks. So what we can sometimes see happen is the product is moving into those secondary and tertiary areas, but we don't see the data, and then the market can be more well covered than it actually looks like from what they are showing. So that's something that we are looking at very, very closely, and the market is also concerned about at this point. But it wouldn't surprise me to see somewhat higher prices as we go into Q3, just as a result of concern around this. The other thing I would say here is that US production has been really resilient, and I see no reason why that would stop going forward. This is US propane production in barrels per day across the past couple of years, and I've put the red line here at 2 million barrels as kind of a marker of which I think is a really healthy production from the US side. And you'll notice, of course, we have this lower period where we had the big freeze and everything shut down in Texas. But you'll see that we are still seeing strong volumes out of the US. And with the crude price where it is, and with US producers often trying to extract natural gas liquids in order to both use as a petrochemical feedstock and to export, that's something that I think will also be helpful to the market going into 2022 as well. We don't see in our analysis any particular reason for that to slow down. And then looking at the bigger picture in terms of supply, this is from our consulting division and our LPG analytics service, which is a little bit longer term. And you can see that, broadly speaking, we are still bullish on LPG production, both from the Middle East and North America, also from Asia Pacific, but it's worth noting that this is not export availability. This is mainly refinery production, which will usually find a home within the market that it's produced in. But the key point here is that these two regions are still in our view bullish. We have various projects coming online which need to feed the markets in Asia, be they for transport or for petrochemicals. And so we don't see a slowdown yet, even though there is a lot of talk around, for example, peak demand for oil, particularly in the Atlantic basin, which may be the case, but ultimately there are a lot of other markets which are going to need product, and they will also need LPG. And in the case of LPG, it's really Asia Pacific where we're seeing that growth. And in a nutshell, that is due to a combination of the petrochemicals, particularly in China, but also in a few other countries around Southeast Asia, and then this expansion of cooking demand across Asia, with India being really the leader in that regard, as we've seen over the past 5 years due to the strong subsidy program, and quite frankly, the amazing logistics that companies such as IOC and your state oil company brothers and sisters around India have really put into place. So we are largely bullish on this. There's still a lot of growth to be had in Asia. There are a lot of people who still need LPG, and our view on the petrochemicals is that there's an enormous amount of petrochemical capacity to come online, particularly in China. Something else to bear in mind on the market, and we did a little focus on this in our LPG analytics service this month, was the role of freight in the market. And the first thing is that we do see a somewhat thinning order book for the VLGC market, or for the number of VLGCs going forward. And you can see it is a bit circular in the sense that we do see it going down and coming back up, and then as it stands, we've just got a few coming online in 2024. Generally speaking, we expect this cycle to continue going forward, and that should help keep a lid on prices if we see more orders come in for 2 to 3 years time over the coming months and into next year. The fundamentals for moving LPG are strong. We see more and more ton-mile demand via each year, and so in principle the investment should be there, despite the fact that a lot of the freight operators, a lot of the ship owners have had a difficult couple of years up to particularly up until 2020. One of the interesting things here that we have done a little focus on, which I thought was worth sharing, is the development of LPG as a marine fuel for those VLGCs. If we catalogue the various new orders coming to the market each year, you'll notice that around half of them from next year and the year after will have an LPG option. I think this is something a lot of people didn't really forecast a few years ago, with a lot more talk about either using scrubbers or compliant conventional bunker fuels. But in the case of LPG, it is undeniably beneficial to be able to use a small part of your cargo, because they can often siphon off a small amount within the tolerance of the contract, and use that if the price makes sense. And you can see that in the case of US Gulf Coast, we often do see a lower price. Although I note with this particular chart, it is not an energy basis, it is purely done on dollar per ton, but you'll see that there is a strong spread there for propane. Of course, there is a lot of propane availability from the US. So that's something that we have been watching closely. Another topic which has been really important over the past year is the Panama Canal. And this caused freight rates to go very high in the fourth quarter of 2020, and these are the three key freight rates that we publish on a daily basis. And you'll notice that there was a genuine spike there in all three of them, but in particular on the Houston-Chiba route. And that was the result of the fact that the Panama Canal had significant delays for vessels to get through, sometimes up to almost 2 weeks. They have since eased, and I think there are two things to say about this, because at one point there was a real concern that what is absolutely key point for the movement of LPG would really become a proper bottleneck. I don't think that that's going to happen, or if it does happen to some extent, it will not be a big problem. The reason I don't think it's going to happen is because I do think this is mainly a COVID impact, and when we look at the situation in the US and in China, of course, the pandemic is relatively under control. The reason that it's a COVID impact is because during the pandemic, so many people are staying at home. They are buying significantly more goods than services, and those goods have to come to the States or go back to Asia in order to be refilled, for the containers to be refilled. And quite frankly, the market wasn't prepared for that in terms of logistics. With the opening up, in particular of the US, I think we'll find that there is some return to normality in the use of the Panama Canal in that regard. However, putting that to one side, what was clearly the case during this period was that the market managed to deal with it by either sending the occasional cargo around the Cape of Good Hope, or rejigging the orders that they were sending into Asia, or sourcing from elsewhere, in particular in this case, in this story here, with Japan sourcing from the Mideast Gulf. But what was clear was the market was able to manage this problem. So I don't see it becoming a significant issue going into the peak season of 2021 and 2022. One thing that should obviously be watched is the situation in the US and China, and this really could have a big impact on the Indian market, and in particular the price that India pays if they are buying on a CP basis. I mentioned already the tariffs which were imposed by China on US products. What you see here is the Japan-China spread across that period, and you can see that at certain points of 2019 we saw almost $100 per ton premium for delivering into China. That price was really reflected on the Middle East prices, because of course all of that LPG had to be from the Middle East or somewhere else, but not the US, which meant that the Middle East, both spot prices and the CP, were being set for that market higher. Now, as I said, those waivers are extended until September. In principle, they should be extended again, but the reality is we don't know. So if the US-China relations, for whatever reason, do not see a pathway through to resolve this trade war issue, there is always that danger of those tariffs being reimposed. So that really would make a big difference to the market. And in China, again, I should stress, will really need a lot of LPG, in particular propane. I already showed the new plants that came online last year. These are the plants which will be coming online in 2021. So again, we have up to, at full capacity, another 3 million or so tons of LPG demand into China. So it is essential that they have access to all that the world has to offer, rather than just that which is from the Middle East, or we really could see a short market going into the peak season of 2021. So do really keep an eye on that if you're concerned about the supply into India. The other thing that's potentially more interesting on the supply side is the potential return of Iran. Now, this again is really not to do with LPG, in the sense that it is a political equation which will ultimately determine whether Iran can return to the wider LPG market. Right now, Iranian LPG goes to China and a few other markets around the region, which are not so concerned about the embargo situation. But of course, if the restrictions were eased, that would bring more players into the fold and more product availability. And it's quite a significant amount of LPG that they produce there. It's 4 or 5 million tons, even more potentially, which could come to the market. So again, that's something else which is bigger picture, which could have an impact on the LPG markets. So to sum up the outlook, which yeah, again, I've taken everything from our monthly outlook service and our LPG analytics service. We're currently in a demand lull. We've seen prices being soft and not really moving too much. It's normal in the second quarter for that to happen. But as we go into third and fourth quarter, we do have concerns about availability. That said, and one thing I didn't really focus on today, we should see more availability from the Middle East with the OPEC Plus agreement easing to some extent. But ultimately, for most producers across this pandemic, that hasn't been an issue. It's mainly been actually Saudi Arabia, which has been restricting loadings, but for the most part, that hasn't been an issue. And then supply and demand have been really up. Both sides of the coin are growing, something that we've seen for many years. 2020 was maybe just slightly lower on both sides because of the pandemic, but it's really a return to growth in LPG. But summing up all of these different factors which could affect the market I was just mentioning, I think it's reasonable to expect some volatility. And I do think we will see the occasional price spike when there are supply concerns. I think sometimes those concerns may be somewhat unwarranted, and when the market comes to that conclusion, then we may see prices go down, or we could see a genuine supply squeeze to some extent if there is, for example, a significant weather demand in the US or elsewhere as we reach the first quarter of 2022. So there's really a lot to keep an eye on in LPG. I hope that was helpful in framing how the market is functioning at the moment. So I will now stop the slideshow and hand back to Parimal to ask if there are any questions. Thank you very much.
Thank you, David. Thanks a lot. It was a very insightful presentation. I really hope the IOC team would have found it useful.